Hey, what's going on, everybody? It is Aaron Trevino here, and we have a terrific guest. We have Matthew from Bryan College Station. He's with Oakmont Group. How's it going, Matthew?
Hey, doing well, Aaron. Thanks for having me on today.
Yeah, absolutely. I know we had breakfast a while back here in Austin a few weeks ago, so it's great to see you again.
Yeah, awesome. It's good to see you as well. It was a
Yeah,
fun time getting to be in Austin for a little bit.
yeah, absolutely. I know that people around your parts don't seem to like Austin too much, huh?
We enjoy visiting for a short time, maybe to get some food and then to get out of there.
Yeah, fair enough, fair enough. So, for those of us who aren't familiar with you, would you mind introducing yourself?
Yeah, absolutely. Like Aaron said, I'm Matthew Rother. Work right now for a boutique life insurance firm out of College Station, Texas. We have an office in College Station and an office in Houston. I'm pretty new to the industry and to the business. I spent 9 years on active duty in the Air Force. Got to travel around the world, live all over the country. Got some pretty cool experiences, and yeah, so now I'm here, have three little kids and a wife, and got to kind of pull out of the Air Force for a little bit and move into something a little bit, hopefully a little bit more predictable. But we'll see. That's to be determined.
Absolutely, very good. So, are you originally from Bryan College Station, or where did you grow up?
Yeah, good question. So I actually did grow up in College Station. Most people, when they hear that, their first response is like, "Oh, I didn't know people were actually from College Station, other than college students." But there is in fact a little bit of a city here, and yeah, so born and raised here. Kind of grew up around Aggie land, and then ended up going to college in Colorado at the Air Force Academy. So I managed to escape and go elsewhere and get some different experiences, which were good. But now ended up back.
Yeah, absolutely. That's definitely a change of pace, right? From Bryan College Station area to going to Colorado.
hmm Yeah, it absolutely is. It was a good, definitely a good experience just to get out and to live somewhere outside of Texas and outside of College Station, which is a really small community and a small town feel. And so it was really neat to get that experience and that just being able to live, in Colorado. I lived in Washington State, got to live in Italy, and so all of those experiences combined, I think, were just really, really good, and hopefully will serve me well moving forward.
Yeah, absolutely. I'm just curious as well. Just given that you live in other states, what are maybe some differences or maybe things that you missed about Texas when you were, in other states?
Yeah, that's a great question. First, I think the first thing we miss is barbecue for sure, because nobody, especially as you start getting further west, um, they'll talk about going out and doing barbecue, like, oh, let's go barbecue on Friday night, and what they mean is like turn on your gas grill and overcooking a burger, and so it just was really disappointing. Uh, but on a slightly more serious note, what I really enjoyed about Texas and still enjoy about Texas is typically just the people and the friendly nature of the culture in general and kind of the camaraderie. It's a very odd, almost like you're a part of some sort of club. And that holds true when you're outside of Texas and you meet other people from Texas, and it kind of remains true when you're back inside Texas as well. So I really miss that and miss just kind of the culture that surrounds that.
Yeah, that is kind of neat. It's definitely special. It's one thing for someone, maybe they've lived in Texas their whole life and they don't have that perspective of living in other places. But for someone like you, you've not only lived in other states, but also in other parts of the world.
hmm Yeah, no, for sure. And it was, I think the coolest thing is going into it. I tried really hard to go into all these places just with an open mind and just seeing, hey, what can I enjoy about these places, and how can I really just get to know different parts of the world and the country. And you really find some things that are just you can really respect about pretty much everywhere you live. And I think that's true just about life in general. That you can always, it doesn't matter who you're talking to or where you're going, you can if you go into it kind of with an open mind and being willing to listen first and make judgments later, then you can learn a lot of neat things about people.
Yeah, absolutely. That's definitely true. So, are you fully transitioned out of the Air Force? Or are you getting out, or kind of where are you at right now?
Yeah, so I transitioned fully off of active duty. I stayed in the National Guard because I really did enjoy the Air Force. I think more than I thought that I would going into it. I just love the career field that I'm a part of. I'm a tactical air control party officer, and so I stayed in the National Guard and got to kind of stay plugged in and tied to the community while also um, getting to live somewhere with a little bit more stability and not have to move around and move the family around as much. So kind of got, hopefully we'll see but I think it's going to be the best of both worlds going forward.
Okay. Yeah, for those of us who don't know, could you explain what tactical air party control is?
hmm Yeah, Tactical Air Control Party is we're inside the Air Force Special Warfare, and so there's really four jobs that kind of fit inside of that bubble. That's TACP, which is what I do, um, combat control, pararescue, and special reconnaissance. And so what we do is we really integrate joint firepower, joint fires and effects with the joint services. So we kind of take the Air Force specifically, and then more broadly, all of the different aspects of the spectrum of warfare, if you will, and try to help integrate those into what the other services are doing.
Yeah, absolutely. That definitely sounds like a pretty neat career field. And it sounds like it was, it served you well, and you're sticking around now that you're in the guard, right?
Yeah, absolutely. Yeah, it was really good. It was a fun and exciting. You got a lot of really cool opportunities, just different joint opportunities. I worked a ton with the Army. Got to jump out of airplanes and go to Ranger School and do things like that that were just kind of unique, I think, for the Air Force mostly. And I think built a lot of just really neat life experience in general. And now I get to kind of continue doing that on the Air Force side, or on the part-time side in the Air Force as well.
Okay. So I'm just curious there in terms of going to Ranger School. I mean, are you able to apply for that, or are you kind of appointed to go if you're in the Air Force, or how does that work?
Yeah, that's a great question. So the most common way that happens for the Air Force, so the Air Force is in general, they're kind of given a certain number of slots from the Army every year. But then the most common way for TACP guys to go is to really get to build the relationship with their aligned Army unit. Most TACP are stationed on Army bases, and so you can kind of build relationships with those Army units, and then when they hold tryouts to divvy out those slots, you can kind of apply and flip in that way. And so that's what I was able to do with 7th Infantry Division, 7th ID up in Washington State, and got the opportunity to fly down to Fort Benning in Georgia, and go through Ranger School. So very unique experience.
Wow, how about that? Um, I've heard a bit about it. Heard a few audiobooks about it, but that sounds like a pretty neat experience.
Yeah, it definitely is a good experience, and just teaches you a lot about yourself and about just working hard and kind of persevering, and then learning to influence and lead other people who are in similar pretty, we'll say, sucky situation as yourself.
Yeah, yeah, absolutely. I mean, obviously, I'm sure that the physical aspect of it is probably pretty physically taxing, but it seems like a lot of it is kind of mastering your own mind.
Absolutely. Yeah. I mean, at a certain point, everybody's, we'll say, like physically broken to the point of it being difficult, to put it lightly, to continue on. And the people that are successful are just the ones that are able to kind of push through that and overcome and continue to conquer things that they think that they can't do going into the day.
Yeah, fair enough. It's kind of interesting that those lessons that you learned back then may be serving you now. Are there any particular lessons, maybe in terms of mentality from the military, any sort of training that you use now in your everyday life?
Yeah, absolutely. I mean, there's things, and lots of it's just I think just a general mentality shift, and that's understanding that life is always going to throw you, we'll say like 3 foot walls, right? And when you approach those walls, you have the opportunity either to stop and to let that become an excuse or just a roadblock, or you have a way to figure out how to get yourself and your team over that wall. And so, that's most of, I think that's, big picture of life, but that's also just business as well. So, the COVID season's a great example of that. And you watch people, successful businesses come up to this, we'll say this is probably more like a 6 foot or 10 foot wall, probably. But, but in general, they approach these walls and they got to figure out, hey, how do we pivot our business and just structure ourselves or restructure or, continue pressing on in this environment to make ourselves successful. And so successful businesses do that well. They approach with that mentality, and unsuccessful businesses don't.
Yeah, there's definitely a lot to be said for, not only confronting an issue, but also, kind of having that flexibility and being able to regroup and kind of press forward.
Yeah, absolutely. Yeah, I mean, that's just um, a huge, I think, indicator just of success in most instances. And pretty much every, book on motivation or on team building or on leadership or whatever the case is, business building, they all talk about those times when, not if, but when you're going to hit hardship and what do you do with it. And so that's just a lot of, I think maybe you could say the military often creates training environments with self-inflicted hardship. So hitting hardship on purpose to try to figure out how you handle it.
Okay, fair enough. Yeah, it's great that you're kind of immune to that and you're kind of able to almost be able to deal with things in a different manner, a better manner.
Yeah, hopefully that's the goal for sure. So,
Yeah.
well, other people determine it, but that's definitely the goal at the end of the day.
Yeah, absolutely.
Yeah.
So, if you wouldn't mind kind of explaining, what you're kind of seeing in the market or what you're really up to, what do you do?
Yeah, absolutely. So I'll just go kind of real quick into Oakmont Group, kind of who we are, what we do specifically, and then talk about kind of more that market space. So Oakmont Group's a boutique life insurance firm. We have an office in Houston and College Station, and we have a couple agents in Colorado and California as well. And we do life insurance specific planning inside of estate planning, and then with what we call enterprise security planning. So working with closely held businesses and helping integrate life insurance into their overall plan. And so our goal is really when we meet clients is to understand first and foremost, like what is your preferred future? What we mean by that is just simply like where do your lifetime goals and your financial goals intersect, and then how do we help you get to that place. And in doing that, kind of the second step that we like to do is make sure that we're integrated and working with the advisor team. And so whether that's with a business, whether that's the CFO along with the business owners, or if it's a family, if it's a family office, or maybe their their CPA or RIA or estate attorneys or people of that nature, we want to always as a firm, we strive really hard to try to integrate all those things so that we don't get into what's called siloed planning. And that's just basically like life insurance design that's done kind of on its own. Oftentimes we see people who knew at one point they needed life insurance. And so they went to, their buddy down the street or went online and searched for life insurance, whatever. And they were able to find a life insurance policy. Well, that's fine and it serves its purpose in certain instances, but oftentimes we find that those things they're just kind of done on their side and they're not integrated properly. And so we do as a firm we work in term insurance and permanent insurance, and we believe heavily in both. We believe that both have a place, a time and place, and specific uses. And so it's just kind of understanding that overall plan and knowing how to really integrate those things. So I mean, most often, we'll see, or not most often, but oftentimes we'll see people with a really heavy bent one way or the other. And we try really hard to just to remain kind of product agnostic, if you will, just understanding that every product, kind of has its place. We see oftentimes too, when we do see like permanent life insurance, that it's just not properly designed. And so people kind of will sometimes get a bad taste in their mouth because of that. Term insurance is relatively, I think, self-explanatory. Most people probably understand that. Just like your car insurance, you pay a premium, you get a certain product for that premium. It's usually for a specific set amount of time, and the premiums are flat. And so you're paying that, flat rate, relatively cheap, for a specific amount of coverage for a specific amount of time. Permanent insurance, on the other hand, that's where it kind of gets a little more complicated. And I think we're generally the biggest value add. And that's, there's really three ways that we understand to fund permanent life insurance. One of them is minimum funding, which is basically just death benefit play. Like, how do we make permanent insurance function as much like a term policy as we can? The second is max funding, and that's kind of looking for death benefit play. And then the third is just mid funding or mid-level funding. And this is the majority of what you see in the permanent space. And frankly, that's just the most inefficient way to fund a life insurance policy. And so that's what we oftentimes, most often we try to avoid that, really. And that's just because that's where you see, just a level pay, pay this higher premium for this death benefit for the rest of your life. Again, there's times and places where for everything, but that's typically the least efficient and the not really the way to go. The most efficient, on the other hand, is when you're minimum funding for a death benefit, or you're max funding for the cash value benefits. And so in the current environment, you asked a little bit about current environment stuff, and we see a lot of interest right now just in max funding policies to try to get basically either as like an investment vehicle, so taking and kind of diversifying that side of your portfolio, the lower yield side of your portfolio, into a life insurance vehicle, just because of the tax implications of the potential distributions in the future. And that's been something that we want to, or that we have seen a lot of people interested in and interested in doing. Going back to the minimum funding stuff, just real quick, if you're min funding, then what we'll often see, or what we try to do, is design a policy where you can buy a permanent policy for as little amount of premium as possible, and then invest the difference. And so, where you might see a level funded policy where you're investing, let's say for $1 million worth of coverage, the premium amount's going to be $5,000 a year. Well, if we were able to get that premium down to we'll say like $3,500 a year, then you have a little bit of extra money to kind of play with and invest where you invest it best, right? And that's not, we're not investment guys. We don't do assets under management. We just do life insurance. And so our goal is to create that life insurance inside of your portfolio, basically, to give you the death benefit protection for your, often, in this case, like most often for businesses. And so it gives you that death benefit protection, and gives you a little bit more freedom to keep investing as you see best, basically.
Yeah, absolutely. So, I guess on that note, we kind of talked about, term, different types of insurance, right? What are maybe, some misconceptions that people have about insurance in general?
Yeah, so I think one is, we'll say one of the things that we like to talk to a lot is, like, people will say life insurance is just a bad investment. And to be honest with you, we totally agree with that. Generally speaking, if you're just looking like in investment dollars to investment dollars, we would agree, like, life insurance is not a great investment tool. However, there's aspects of life insurance that are really necessary. And what we try to do with that life insurance is to try to create the freedom to invest more aggressively and more freely. And so we're not trying to replace necessarily an entire portfolio with life insurance, like for instance, like a cash portfolio or something like that. In some cases that may make sense, but most cases not, right? We're trying to create products that either have multiple levels of value or create products that are funded in the most efficient manner. So that's a great question though. I guess one example that we've done recently is there was a family with a pretty large estate, and they needed or they had a lot of cash and bond investments set aside, just low yield investments that were set aside to pay estate taxes, right? Well, we were able to take a life insurance portfolio or life insurance product and create a portfolio that either met or exceeded that hurdle rate for that portfolio, and then that freed up all that capital to then go reinvest where the family could create value instead of having to like sock away money just to pay for liquidity's sake to pay estate taxes. They were able then to go reinvest the way that family reinvested best.
Yeah, definitely. It kind of sounds like, it kind of sounds like that's how it plays into your investment strategy, where I guess dollar for dollar, life insurance doesn't sound like the best idea, like you'd mentioned, but when you use it as a tool and you leverage it that way, it sounds like it can free up some cash, right?
That's right. That's right. And one thing that we do with real estate investors relatively often, and especially right now in this the low interest rate environment, is we're doing a lot of what we call premium financing. And all this is using leverage to pay for your premiums to free up that capital and create to create value both now and then also in the future. And the kind of the way that works, like as an example, we had a client recently that we were building out products for that, he had we basically were able to take, he had a budget basically for his life insurance because he needed death benefit protection, which is a legitimate need for most people on some level, right? Well, his goal was to to be able to basically recoup as much of that money on the back end as he could. And so by maximum funding a permanent life insurance policy, we were able to create a product that created distributions in the future. And the way that it's typically illustrated is like, hey, this is your retirement income for the rest of your life. That's not realistic for most, especially for most like entrepreneurs and business owners, right? Like they're like, well, I don't need income for the rest of my life. But what it does do, if you have that cash value and the tax-free dollars, because it's all tax-free distributions. If done properly, it's tax-free distributions on the back end, and the death benefits tax-free as well. And so what that does is, like, for instance, at the beginning of this year, if you're living in retirement and or towards retirement age, instead of cashing out some of your portfolio, your normal investments, whether it be qualified plans or something on the outside, instead of cashing in and locking in those losses like that we had in like March, April timeframe, you're able to go into your life insurance portfolio, pull out the cash, some of that cash value in that portfolio with no income tax, and use that as like a bear market hedge, for instance. So you're pulling out those dollars. It's not going to affect your life insurance portfolio, and it's not going to affect your other qualified plans or anything like that. It gives them time to kind of rebound with the market. And so that's what we like to do. And for this guy in particular, so we illustrated, hey, let's pay $75,000 a year for X amount of death benefit and see what kind of distributions we can get. And then we looked at financing that same policy, and we can do it kind of one of two ways, right? We can either pay $75,000 towards the interest and towards the principal of the loan to pay down a little bit of that loan over time. And I think we paid this one for 7 years. We illustrated it paying for 7 years. He's a young business owner, entrepreneur, and has a couple different businesses that are both growing right now, and so he expects to be able to sell off these businesses and have a liquidity event here in the next, we'll say, like 10 to 15 years, right? So he has steady income now, but he wants to free up that capital later. So he illustrated it paying that $75,000 for that for those 7 years towards principal and interest, and then we compare that with just paying, like buying that policy outright without financing it. And then we also illustrated just paying just capitalizing that interest, sorry, and paying just minimum interest on that, and letting the policy then capitalize that interest over time. So in both of those things, I think they kind of get at what his goals are, and typically what we see real estate investors get excited about, because that's what you do with property anyway. You're already kind of used to that cycle. Hey, let's finance this policy, capitalize the interest. Over time, the policy value is going to grow, and you'll be able to pay down that note, and then free up all of the cash value inside that note by paying it out of the policy itself, not having to pay down with external funds.
Yeah, you
So,
definitely drew a great parallel, kind of, not only talking about how the policy works, paying down the note, right, but also drawing that parallel to real estate investing, because real estate investors are accustomed to basically already doing what you're saying, right?
mm-hmm. Yeah, that's exactly right. And so that's, again, just with the environment, the interest rate environment where it is, we find it just really, where we used to show premium finance as kind of an option for like just certain net worths in certain instances where we may or may not illustrate it, because the interest rate environment's so favorable. We illustrate it almost every time we run an illustration for somebody. We show that just as an option, just because interest rates are so low. You can borrow that money at such a low rate. The policy value, and the monies inside that policy are going to continue to grow, and so it's just a really favorable environment for that right now.
Absolutely. So in terms of the policy value, I mean, how do you generally value a policy? I mean, for one person, a business owner versus maybe a couple, maybe versus a family. I mean, how do you kind of assess that?
Yeah, that's a great question. So what we try to do is, again, try to create as much efficiency in this process as possible, right? Most of the time, like entrepreneurs and business owners, they don't need 4 different policies to cover, be it all of their businesses or their family and their business or whatever, right? We can do lots of the same things with 1 or maybe two policies. And so we try to create efficiencies by understanding, like, what is your business value? Like, what is the valuation of your business at this time, and how is your buy sell set up, so that like if you have a business partner, for instance, how is that going to set up your business and your business partner if one of you were to pass away? And all it does is just provide that liquidity for one side to buy out the other. What people often fail to account for, however, is, like, depending on the size of the business or the size of the company, sometimes you can actually create income tax problems just by like overnight, by doubling the value of your business. So if you have a $30 million business, having 2 $15 million policies is a great, seems great on the surface, but all of a sudden, if one partner dies, then overnight, the other partner who received, another $15 million from that buyout, now his estate, the family, they got their value, but this business owner's estate now has what is that, $4 million tax liability or whatever, just overnight. And so that's something that sometimes is overlooked, and what we try to do and create efficiencies in doing that. Did that answer your question? I feel like I kind of went down a rabbit hole, but
No, yeah, definitely. I was, it definitely does kind of, I mean, it depends on the individual, right? It depends on if you're a business owner, entrepreneur, one person, a couple, a family.
yeah.
That's going to determine, kind of the tailor-made policy for you, right?
Yep, that's exactly right. And that is again kind of our goal is to understand like, hey, who are you? What are your values? And then how do we maximize that the impact and enjoyment of your wealth, right? So whether that's being able to free up capital for you in the future, or just give you a little bit of a sense of security. Maybe it's building in long-term care. That's another thing that we're just seeing a ton of right now is people, even really wealthy people, worried about long-term care costs because they've been burned by in recent years by parents or grandparents who've needed long-term care coverage and either didn't have it or had the wrong type of coverage or insufficient coverage. And so that's a huge thing. So just setting up and creating some of that security around major life events that helps business owners really operate more freely, right? And ultimately, it kind of protects too, even if it's like a key man insurance policy or things like that. It protects that blue sky value of your company, right? So there's maybe like the value of like, hey, I go get a business valuation and they're going to value my company at X. Well, like in your mind, your company, because of all the external value that it brings, it really provides a lot more value than that. And so what we try to do is help protect that blue sky value inside of your company as well. And again, do it in the most efficient way possible. And so, sometimes even for families, that's creating second to die policies where you're insured on both on both couple or on the couple itself, on both individuals inside that family. And so then it functions, as more of like an estate planning tool. And then another huge thing that we love to work on, it's a big part of our business and some of our favorite things to do is like how do we structure maybe our estate to give? Like how do we give freely, give the most to charity, or setting up foundations, giving to foundations efficiently, things like that.
Yeah, absolutely. It's definitely something to consider, especially as people, maybe their parents are getting up in age, they're trying to, plan for their family. And there's a lot of different moving pieces that continue on that, people need to think about.
That's right. Yeah, there's always tons of things that honestly they're just hard to think about. And when you're an entrepreneur, when you're a business owner or an investor or whatever the case is, those are the last things you're thinking about. Honestly, and we understand that from just from like the business side, it's difficult to turn your eyes back inward and look and say like, all right, what are my vulnerabilities on the backside? And so that's where we like to come alongside the business owner or the family and help unpack some of those things and understand, hey, this is what we're protecting from and what we're protecting against, and this is how we're going to do it in the most efficient manner that provides the most value and the most bang for your buck.
Yeah, absolutely. It's definitely crucial to not only be able to connect with someone who's very knowledgeable like yourself about these sort of things, but just kind of knowing where to start, because it kind of seems like there's a few things people don't want to talk about, taxes and insurance.
Yeah,
And for some people, it can kind of be difficult to know, okay, I know that I need it. Where do I start? I know that I need it. Who do I talk to? Right.
that's right. Yeah, and that's you hit on a huge on a great point right there too, Aaron. Like just talking about um, as like our aim as a firm is to be just that piece of your team, right? Like we understand um, like where we're really good, and then where we can rely on other people. And so we want to be a part of that team. We don't want to come in and like try to take over your entire business succession plan or estate plan. Like there's people that understand more holistically about that stuff. But we have a great working knowledge. And so, our founders 37 years ago, when they decided to do life insurance specifically, it was in a time when financial planning in general was really going kind of the more like jack of all trades style, where they're managing your assets, they're doing your retirement planning, they're doing your insurance planning, and everything else. And there's, to be fair, like phenomenal individuals in all those spaces. Where we want to come in is add the sophistication to the life insurance side while integrating with the rest of your team and making sure that all those pieces fit together, right? That they're not, again, like going back to what I talked about at the beginning, we're not getting that like siloed planning aspect of life insurance.
Yeah, definitely. You drew a great kind of a great picture of kind of the pieces fitting together, right? So whether you're a business owner, you're an entrepreneur, you have your thing that you're doing on a daily basis. Maybe you have your partner, your family, whatever it may be. But you're talking about providing that piece that's not only you're providing a service, but you're also allowing people to free up their own cash and have more freedom to kind of move forward as they wish.
That's right. That's exactly right. Yeah, it's just providing that security and that freedom. And then there's ways, again, like depending on your situation, that maybe we can also provide like real tangible assets to that. And that's something that we want to explore if the opportunity is right. But we're we work really hard to never never force those instances where they don't fit, basically.
Yeah,
So,
yeah, absolutely. Definitely, Matthew. Well, is there anything that you haven't said that you'd really just like to hammer home?
um, I think we were able. You let me talk probably more than I should have, but no, I think we hit pretty much everything. So I really appreciate you you let me talk and kind of hearing what I had to say.
Yeah, absolutely. I definitely enjoyed talking to you at breakfast the other day.
Yeah,
And obviously, like I mentioned before, insurance is important. It's definitely something that kind of people need to account for, and needs to be one piece in your puzzle, right? So it's great to be able to be around people who are knowledgeable and provide a good service.
awesome. Yeah, that's our goal. And I guess on that note too, like while I think our biggest value add is probably in that with closely held businesses and families, like high net worth families. We still we're just really into building relationships, and so even if you're a younger guy that doesn't have maybe a huge estate right now, maybe, or a huge business, we'd love to still help you out just with your life insurance planning and making sure your family's just protected in general from the real negatives in life, I guess.
Yeah, definitely. It's always good to have that option, to have that plan. Um, Matthew, maybe someone's watching, maybe they they want to get a hold of you, maybe something you've said has really resonated with them. How do we get in touch with you? How can we contact you?
Yeah, that's a great question. So our website is oakmontgroup.com, and just all one word. So you can start there and kind of see, generally just what we do. It's more of just an approach of like, hey, this is what we do. A lot of just what I talked about. If you want to get in touch with me specifically, my email is just my first initial M, and then last name Rother. It's ROTHER at oakmontgroup.com. So shoot me an email. And then my phone number is 979-255-8698. So an email or a phone call. I'd love to connect and sit down. I'm happy to go, do breakfast or coffee or lunch or just jump on Zoom. So we do a lot of both these days.
Yep, that's right. That we do. That we do. Well, Matthew, I've not only learned a little bit about you, but also about insurance, about the services you provide, and we really ran the gamut there. So I enjoyed that a lot. Thanks for
Yeah,
coming on.
absolutely. Thanks, Aaron. Thanks for having me.
Yes, sir. Take care.
All righty. See ya.